This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Job surge hiring ramped up last month, so did wages. And while Main Street gets back to work, Wall Street wonders what the strong report may mean for the Fed.
The new normal? Don't look now, but mortgage rates are heading higher just as we enter the home stretch of the spring selling season.
And in demand, imagine no college degree and a starting salary of 70 grand a year. Meet the entrepreneurs who are making that a reality. All that and more tonight on Nightly Business Report for Friday, June 5th.
Good evening, everybody, and welcome. People looking for work got some good news. Job growth accelerated sharply in May. The economy created 280,000 jobs last month. That's the largest gain since December. Wages also rose. And while the unemployment rate ticked up slightly to 5.5%, it was for good reason. More people, no longer discouraged, entered the labor force. The better-than-expected report sent bond yields higher to levels not seen since last October. And now attention turns to the Federal Reserve and what an improving job market means for the timing of the Fed's first rate hike. Hampton Pearson has more.
Employers created more jobs in May than in any month this year, with nearly every sector of the economy hiring new workers. Job growth for the last 3 months has averaged 207,000 after revisions for March and April. The unemployment rate went up to 5.5% for a good reason. Nearly 400,000 new workers entered the job market. Leading economists say if these trends hold, the Federal Reserve would have the economic ammunition to raise interest rates later this year.
It was hard to poke a hole in the jobs report. You had the headline number coming in strong, a lot, much better than expectations, net positive revisions, so the trend looks good. And that's what I think is really important for Fed officials.
Professional and business services, healthcare, and surprisingly leisure and the hospitality sector led the way in new hires. City Bikes is a small business success story. Saul Lakin peddles bikes costing from $450 to $3,000. Business is booming, and he's hiring 10 new workers.
The economy has been doing better and better, so have our sales, which means that we actually have some funds lying around to invest in these new programs and these new employees.
After working temp jobs for years, Joe Paisley just got hired 3 weeks ago.
I mean, I had several other, prospects, but yeah, I think that City Bikes is the most in line with my philosophy about the practical use of bikes.
Other economists also see improving spending patterns in housing and autos as a sign the consumer may be ready to step up.
We have seen pending home sales at the strongest number since 2006. We've got new vehicle sales at the strongest number since 2005. We've got unemployment claims at the lowest level in 15 years. So this is actually quite a healthy economy here, much more healthy than the Fed, I think, has been talking about.
The steady hiring could drive the economy for the rest of the year. The hope now is to get the cautious consumer off the sidelines. For Nightly Business Report, I'm Hampton Pearson in Washington.
The first Fed official to speak publicly after the jobs report says the central bank is still likely to raise interest rates later this year, but New York Fed President Bill Dudley declined to say exactly when the Fed would act.
I still think it's likely that conditions will be appropriate to begin monetary policy normalization later this year. But the likelihood and timing will depend on the economic outlook, and that will be largely shaped by the incoming economic data.
Dudley, we should point out, is a voting member of the Fed's policy committee.
Our guest tonight says the headline number on today's jobs report was great, but the details are even better. He is Anthony Chan, chief economist at Chase. Welcome, Anthony. Nice to see you.
Glad to be here.
So what was it that impressed you so much about the internal components about this report?
What really impressed me is that people have been constantly talking about all those discouraged workers, that they somehow make these numbers a lot worse. But the reality is that discouraged workers are going down, and in fact, they're down more than 50% from the peak during the financial crisis. And you saw almost a 200,000 decline in discouraged workers. The other thing that really impressed me is the number of people that are rejoining the labor force. Once again, you can't say it's because people are dropping out of the labor force. We are, in fact, entering a huge number of people into the labor force, and that means that when the unemployment rate goes up and under these circumstances where you're creating a lot of jobs and a huge surge of people coming in, it's great news.
I think there was an uptick in labor participation for 3 months in a row. But one area that is of concern, it seems to me, is youth unemployment and minority unemployment, which are peskily high. And I believe in the case of minority unemployment actually rose this month. How do we solve that?
You're never going to have everything hitting on all cylinders, but one of the things that I think is the solution to that problem is to create more educational opportunities. When you consistently see the college educated unemployment rate below 3% for so long, and that number has continued to come down during the economic expansion, that's impressive, and that tells you that that is the ticket to growth. If you look at since the beginning of this economic expansion that began in June of 2009, more than 70% of the jobs that have been created have gone to people that have college educations or higher education. And I think that's pretty impressive to know that if you're trying to solve that problem, creating more educational opportunities for those individuals. I myself come from a very humble background, and I'm the first person to graduate from high school, college, graduate school. And I think that education has, in fact, served me well, and I think it'll serve a lot of people that have similar backgrounds that I have encountered.
And Anthony, I know your advice will serve our viewers well as too. All right, thanks for joining us, Anthony Chan with Chase.
My pleasure.
Well, stocks spent much of the day moving between gains and losses. By the close, the Dow Jones Industrial Average fell 56 to 17,849. The Nasdaq up 9 by contrast. The S&P sort of split the difference. It was down 3. For the week, all 3 major indexes were lower.
As we mentioned, the higher than expected May jobs number sent bond yields soaring, the 10-year in particular, and that's the one that mortgage rates follow. Diana Olick explains what that means to the tail end of the spring housing market.
Phones were ringing off the hook at the PMAC lending office in Boca Raton, Florida today after a sell-off in the bond market sent mortgage rates higher.
There is a panic in the air. The question just becomes, is the train going to stop? Where are rates going to end?
We're going to lock the rate at 4.75.
4% and above is the new normal on the popular 30-year fixed loan, and borrowers are not taking it lightly.
People are reacting quickly. Well, we know 4.25, 4.25 is still historically an amazing interest rate, but overall, once you've been used to being below 4%, for quite some time, it takes a little bit of getting used to in this short period of time.
Just look at where rates have been over the past 2 months. Down near 3.6%, now up at 4.25. The last time we saw a climb this steep was after the so-called taper tantrum right around this time 2 years ago. The Fed hinted it would stop buying mortgage-backed securities and bond yields shot up. So what does that mean for both home buyers and sellers? For the home buyer, the difference on the monthly payment for a $200,000 loan from the lows of this year to today is about $72. That might not sound like a lot.
For now, rising rates means good news for housing. It'll push people who are on the sidelines back into the game. But you probably have a ways to go before higher mortgage rates have people not buy homes.
But it could cause a problem for borrowers actually qualifying for the loan.
That may result into not qualifying or qualifying for $10,000 less in purchasing power.
Sellers have been in the driver's seat mostly, with demand for precious few listings driving prices higher. But as interest rates rise, sellers may have to reconsider their asking prices if they want to get qualified buyers. For Nightly Business Report, I'm Diana Olick in Washington.
OPEC said it will maintain its current oil production levels for at least the next 6 months. That level now stands at 30 million barrels a day, and that could keep a lid on oil prices for a while. Steve Sedgwick has been following the action at OPEC from Vienna.
World oil markets coming off recent highs on the back of the OPEC decision to keep output unchanged at 30 million barrels a day in Vienna. Not a great surprise, given the fact that actually the group is producing a way above that figure at 31 million barrels a day. But it was a very short meeting, a meeting which all the players look very happy, despite the fact, of course, that oil prices are still lower than where they were back in November when they originally decided to keep output unchanged, and that sent the markets down very aggressively. What they are saying here is, though, that all members can pretty much produce produce as much as they like, and they're seeing more demand on the back of lower prices from Asia and from Europe as well. One interesting outlier going forward, though, is that Iran could well be coming back to the world export market in some fashion if they get their nuclear deal. I spoke to the Iranian oil minister, who said actually he could put on the table within 7 months 1 million barrels of extra oil for exports as well, and that of course could dent the world oil prices and put way more supply than is demanded onto these markets. So at the moment the OPEC ministers seem pretty happy with the current level, although many of them saying the better price for them and for the consumer at the fair price is $75 to $80 a barrel. That is round about $15 higher than where WTI is currently trading. This is Steve Sedgwick for Nightly Business Report in Vienna.
Still ahead, the skill that's needed most in this labor market. Mary Thompson tells us what that is and where the jobs are.
With the economy continuing to add jobs at a strong pace, one sector of the market is bracing for a shortage of almost 200,000 workers by 2018. Mary Thompson has more on the big job opportunities in big data from LinkedIn's headquarters in Mountain View, California.
A painter since childhood, 29-year-old Mariah Walton says her art makes her good at her job.
I have a mental image of everything in my brain, and I feel like that's actually been a really good strength in joining disparate data sets together.
Always an artist, once a meteorologist, Walton is now a data scientist at the networking site LinkedIn. Her job is to sift through the billions of data files generated by clicks on LinkedIn's website, as information from this big data is seen helping the firm serve its clients and advertisers better. But it's not just tech firms like LinkedIn mining big data. All industries do it these days, putting a premium on workers like Walton.
Job market is very hot. Data field is actually very sexy. It's in lot demand. So it's super hard to find right talent and the right people.
That demand leading the consulting firm McKinsey to forecast a coming shortage of big data analysts.
In 2018, we sized the potential gap of 140 to 190,000 positions in the United States alone.
LinkedIn's head of data recruiting, Sherry Shaw, will hire over 100 data scientists this year, a 50% increase from 2014. She says competition for talent often leads to bidding wars for workers who, depending on their background, can command a six-figure salary.
So LinkedIn keeps its mind and eyes open when looking for talent, searching its own website, recruiting at tech talks and conferences, and taking a chance on people like Walton who don't have a background in computer science.
People like Jared Lowmaster, the 31-year-old working in intelligence and the solar industry before landing at LinkedIn.
The one common thread, I think, that really unifies those is I was in a place that had a great deal of data, and it really wasn't structured, and there were these interesting and really critical, important business questions that we wanted to ask of the data.
Questions big data miners like Lowmaster and Walton see helping their employer answer the big questions that face business today. From Mountain View, California, I'm Mary Thompson for Nightly Business Report.
Gap sales keep sliding, and that is where we begin tonight's market focus. The retailer saw same-store sales fall in May, but not as much as analysts expected. Sales at the company's Old Navy brand were much higher, and that helped offset a decline at Gap and Banana Republic. Still, shares were off today, about 1%. They finished at $38.22. Strong results, by contrast, from Diamond Foods, the company easily beating profit expectations today. It also hiked its full-year earnings guidance. Revenue did miss forecast, but investors overlooked that. Shares were more than 7% higher to $31.11.
David's Tea saw its shares surge on its first day of trading. The Canadian beverage giant will use those proceeds from today's IPO as it looks to expand into North America. Shares were priced at $19 apiece, but the stock surged well above that, closing at $27, a gain of 42%. And late in the day, shares of Diageo got a lift on reports of buyout interest. A Brazilian billionaire is considering taking over the liquor giant that owns Guinness, and that's according to Bloomberg. Shares popped right when the news came out, ending the day 8% higher at 118 even.
Let's get right to our weekly market monitor. Last time he was on in March, he recommended Apple. It's up 1.5%. McDonald's, though, off 1%. His third pick, Citigroup, up 6%. He's Mark Lucchini, Chief Investment Strategist at Janney Montgomery. Mark, welcome back. Good to have you here. Before we get to a pick that's still on your list, let me ask you about McDonald's. Are you still comfortable holding it?
We are, Tyler. We bought it for the 3.5% dividend yield it offered at purchase price, and the fact that the new CEO still has plenty of runway to be able to turn around the iconic franchise that we know has great brand value but needs a couple of fixes. So as a consequence, we're still long.
And you liked Citi the last time. You must love it now. It's up. You're sticking with it.
Absolutely. The money center banks are cheap from a valuation perspective, but yet haven't fully been monetized, even as earnings growth has started to track fairly robustly within the space in the aggregate. Citigroup particularly is the cheapest among those universal banks, and we like its long-term prospects.
You also like Gilead. Why?
Well, the healthcare space is one that's done very well over the last several years, has a demographic tailwind, of course. Gilead is a biotech company trading at 10 times forward earnings versus an industry that's trading at about a 50 multiple, and the S&P 500 more than 40% higher than that. So it's cheap on a valuation basis, good growth prospects, and its hepatitis C treatment is considered to be the best in the industry.
Let's turn to your third pick, which is an ETF, iShares Home Construction, the ticker there, ITB. I'm curious why you like this one on a day when interest rates are moving up. We've got mortgage rates moving up. That's usually not great for homes and home builders.
Well, Tyler, like a previous guest had alluded to, it may actually entice some buyers off the sidelines for fear that they're going to miss the opportunity. But that said, it's the first time in actually quite a few years we're starting to actually see household formation grow at a pace faster than housing starts. And so to the extent that may draw demand into the home builders market, we think it's undersupplied and therefore ought to be good for home builders' prospects to continue to put new homes out into the marketplace to be bought.
Obviously, you like those three stocks that you gave us, but overall, when you look at the market, a lot of people think that valuations are a bit stretched. Would you agree with that or not?
That's not unfair, Sue. We think valuations are full, and that's why if you're going to be long in the equity market at the moment, I think you need to try to find spots where there's great value, or at least you have some valuation support. And those sectors that I mentioned, consumer discretionary, subsects of it, financials, and of course healthcare, we think represent that.
Mark, thank you very much. Have a great weekend, sir.
Thanks, Tyler. You too.
Mark Lucchini with Janney Montgomery.
Coming up, forget a four-year computer science degree. Meet the entrepreneurs who can teach you to program in just 4 months. It's our latest bright idea.
Here is what to watch next week. Apple's Worldwide Developer Conference kicks off Monday, so we'll see what new iProducts the company has in store. McDonald's will announce monthly sales for the last time. The chain has decided to stop reporting the figure as part of a new turnaround strategy, lower the month-to-month pressure there. A few important data reports out next week, including retail sales. That's a biggie on Thursday. That's what to watch next week.
Chasing the Triple Crown. At the Belmont Stakes tomorrow, American Pharoah will try to do what only 11 horses before him have done. Robert Frank talked to the Thoroughbreds owners ahead of the big race.
Honestly, it has been surreal. It's very hard to put it in content process. I mean, we've won the Kentucky Derby, the Preakness, and now in our own state coming back, trying to do something that have not been done in 37 years with a horse that we bred, we have the whole family. It's just, we are elated. It's a big dream. You don't want to wake up. But it's as a sport, as a fan, I just really want to see that happen in my lifetime.
Yeah.
And it could happen, and it just being part of it makes it very sweet.
We've been here so many times with horses winning the first two legs, and then just not this mile and a half separates so many horses from history. What makes you confident specifically about his condition and how he's running right now that you think he can win this?
Just the way the horse looks right now, he's giving us the confidence that's making us want to be here and making us feel this way. The way he's doing things, the way he looks, his demeanor, he's right on cue.
Good luck to him. If American Pharoah wins the Belmont Stakes, he will be the first Triple Crown winner since 1978.
Well, in education, Sue, a Triple Crown for graduates might be a degree with little or no debt and a solid job, right? Well, sometimes it feels like putting those three together is almost as rare as a horse racing Triple Crown, and that's why the subjects of our next story, one an Ivy Leaguer who made it through Harvard Business School, and the other a college dropout, got the bright idea to do something about creating an affordable education that really pays off.
Jen Eisenberg is a software engineer at Paperless Post. That's the online stationery shop. She helps write the instructions or code that make the website function. A computer science major? Not Jen. That foray lasted one semester.
I realized I couldn't actually build anything tangible. It starts more with theory and algorithms.
Instead, Eisenberg majored in linguistics, but spent the summer before her senior year of college learning the basics of coding at New York City's Flatiron School.
We're actually graduating fewer computer science majors from college today than we were 20 years ago. That's crazy. The internet happened.
Adam Enbar helped start the Flatiron School, and he didn't study computer science either. After college, he wondered if his education was really worth the hundreds of thousands of dollars he and his family spent.
I didn't feel like I had any real skills. A college degree used to be the best investment somebody could make, and that's not really the case anymore.
He began working at a venture capital firm, looking for ways to invest in fixes for higher education. He didn't find much until he heard about Avi Flombaum, a college dropout who was teaching people to code and helping them get jobs.
Code is just giving amazing instructions. Computers are stupid. They don't know anything. We have to teach them everything.
Flombaum taught himself to code as a New York City teenager. He dropped out of college to write software for a hedge fund. Later, he co-founded his own web-based business, but on the side, he began teaching others to code. At meetups, workshops, coffee shops, students thanked him for changing their lives.
So I was like, wow, this teaching thing is really amazing. That was a profound amount of impact to have on someone.
So Enbar sent a tweet, and they met for coffee.
He's telling me about his hobby, all the while my mind is melting. I'm like, you are doing what most of education in America can't do.
Enbar figured they should start their own school.
And I was like, no one is going to come to our school.
Within days, though, Flombaum changed his mind. They leased space, bought desks, and for about $40,000 total, opened the Flatiron School in October 2012.
Having the vocabulary, how to give very, very clear instructions, is a science in itself.
Only about 6% of the applicants are accepted into Flatiron's 4-month program. It costs $15,000. But 99% of the graduates, nearly 500 in less than 3 years, have jobs. Average pay? More than $70,000 a year.
My increase in salary was something like 40%.
Tiffany Payon studied music business management in college. Now she's a software engineer at an online marketing firm.
I was a musician, I was a theater kid. It really doesn't matter what type of person or what kind of background, as long as you want to learn it.
Which is why Enbar and Flombaum see a future where coding, like reading, writing, and arithmetic, is a basic tool that can open the door to success.
We just need to create a new way to teach people this stuff and a new kind of paradigm that doesn't require 4 years and a master's degree in linear algebra in order to take your first computer class.
Students at Flatiron range in age from about 17 to 50, and Flatiron is offering classes with live teachers, not online, for high schoolers in 13 cities across the country this summer. The founders believe most jobs will eventually entail some level of coding, and that's why it's not just for computer science geeks.
I think that's fantastic.
Way to go.
My daughters would love that. That's it for Nightly Business Report for tonight. I'm Sue Herrera, and we want to remind you that this is the time of year that your public television station seeks your support.
I'm Tyler Matheson. Thank you for your support. Have a great evening, everyone. We'll see you
And
here.
weekend.
And a weevening. We'll see you on Monday.